If I may first correct our name, it's SJS Markets now. As far as the program goes, I think that the bullish reaction reflects the fact that terms of participation for private investors have been made extremely attractive, which means that there is a good chance that many of them will bid for the assets and therefore their prices will be relatively high. On the other hand, there still remain substantial risks. The plan will not start until May. Until then, the economy will continue to deteriorate. If banks sell these assets, they may take further write-downs, and who knows if the capital hole will be filled by new public money. The Congress may not agree to that. Finally, the plan encourages the private sector to take on new, huge leverage. And remember, leverage is what got us into the mess in the first place. So a lot of risks, and I think that the rally is unsustainable. I think that indeed the optimism has gotten the markets too far, and that a substantial correction is very likely in the near term. Remember that the government has pretty much done all it can, and now the question is, what else do you have? And what they did so far is not conclusive. I think that China is correct to be concerned about the long-term position of the US dollar, in which it has invested trillions of its reserves, because the massive amount of debt that the US government is taking may undermine the strength of the greenback. So it could be in China's interest, as well as in the interest of many other major trading powers, to have an alternative to the greenback, such as the international currency that Chinese central bank was talking about yesterday. But I don't think it's feasible for that to happen, because the US would have to be on board, which is unlikely, because it keeps to benefit from the strong position of the US dollar. Thank you for having me.